Market news and insights to our website, CNBCAfrica.com. Now, as first quarter earnings and dividend announcement wind down, investors are switching to investments in value, and analysts at Anchoria Securities expect a near-term market slowdown and possible correction. Folagbade Adeyemi, the Managing Director at Anchoria Securities, joins me now to discuss the shift we have in Nigeria's equities market. Thank you so much for joining us on the show today. Fola, let's start off with the market structure shift we're seeing here. Retail dominance, but with institutions now less dominant, one of the questions I've also asked, who now provides that sort of smart money discipline that typically stabilizes the market whenever we see sell-offs?
So I think, and thanks for having me here on the show, I think it's a case whereby smart money is still prevalent. However, we also need to be very clear that the entrance of the retail market to this space brings a very strong push in terms of buying power. Whilst you can say retail money is dumb money, but truth be told, it has shown itself to be very resilient over the past 2 years. Where we had a case whereby market was doing 2-3 billion a day in turnover, and we're doing about 20, 30, 40 billion nowadays. They're still maintaining about a 35 to 37% stake in that pie. I think really what is happening is that we're seeing that they are willing, the retail desk, the retail market segment is willing to embrace the risk, which is what has been missing for the past 10 years. And then coming back to the space also spells a lot of interesting prospects for everybody that's looking to raise capital. Because whilst you see smart money in the form of institutional money, institutional spend being able to push the margins, retail are willing to embrace a little more slack in that regard. It will be good to see what happens in the space going on in the future. But I do think that this push in this direction is not out of place. It's not out of place with respect to global happenings. It's happening across board. It's just that Nigeria is now very aggressive in that space, largely due to online trading, online access, and things that haven't been strongly pushing forward in the past.
And talking about market nuances now, let's also talk about the earnings-related check we have going on, and then the FX windfall also fading. Now that the tailwinds are fading, another question we ask ourselves, which sectors are at most risk, especially on the back of this, should I say, tide of earning disappointment that could come through?
Honestly speaking, I think this is a perfect segue from what we were talking about, considering that, and you said which segment is at most risk. I think clearly the banking sector, from what we've seen. Access got punished, UBA got punished, they sincerely got punished. And again, it speaks to the tonal and structural shift in the market, right? The retail investor is not necessarily looking for capital gains. They're very sticky on when it comes to dividend payments. And the truth is, anybody that's not willing to understand that psyche and makeup.
Would you say our equity valuations have already adjusted to this post-scenario?
I would say, to be honest, I think we are seeing that adjustment ongoing now as we speak, to be honest, because right before things like declarations of the earnings releases for instance, like Access. So Access was pushing about 30 naira. Immediately that pricing information came out around dividends. The price back down to about 25, 26. So I think that correction that we're seeing now, the volatility we're seeing now will die down, probably die down over the next 1-2 months. Because again, we have all been baked in.
Well, how deep do you think this market correction will be? Will it be a mild pullback, or what sort of scenario should we expect?
It's hard to say, because I think we're in new territory right now. Because one, we're in a situation whereby we're in the midst of a bull run, but also we're coming into a political cycle. Political cycle means people embrace less risk. Most times people take money off the table. So we expect that, for instance, in this instance where the market is booming, I think in and which is what I anticipated, markets would be bullish in H1. I think H2 would be more subtle. I think the pullback would happen in Q3 because, again, Q3 historically is always a quiet quarter. Volatility comes back at the end of Q4. So the question really is, between now and Q3, what do you think is going to happen? I think that pullback will happen. Also looking at the fact that inflation is also on the upside again, and that repricing and interest rates is going to affect
because then investors will be asking themselves, why should they keep their capital in the equities market rather than the double-digit yields that they would have in the fixed income market?
Exactly. So the flight to safety, I expect will happen. And with, again, inflation pushing that narrative, with the political cycle starting again, I think Q3 might see some moderation. Well, whether it'll be very aggressive remains to be seen.
So it's fair to say that we've reached the peak of the equities rally for now?
It's hard to say. I suspect so, also with the fact that something like a Dangote refineries is coming to the market. And with the fact that that is happening, I anticipate a lot of, it may be a sell down, right? People might just take money off the table and you say, no, I want to position for Dangote refinery. So we might see a market pullback really come really strongly over the next couple of weeks.
And talking about this sort of big listings and capital market pipelines now, when we look at the structure of things as it is, I'm trying to coin my question quite succinctly now. Do you think the market is overly dependent on just few mega sort of transactions to drive momentum? I think that's our MO. And
yes, it is our MO. And the truth is, I think we should also understand where we are as a market. I think we're getting there. These mega listings really do help, whether we like it or not, in terms of market size. We cannot always have landmark transactions.
But for scale and sophistication?
I think for scale and sophistication, it is what we need. Let's just call us. Because in the end, look at what the impact of the Dangote refinery asset has done to the market itself. Not just market, the economy. So it's very much needed that everybody needs to understand that issuers need to come to the market, take advantage of the current market boom, and come to the market. So this drive to come to the market, landmark listings, is very much needed. And I do believe that we'll probably see more in the next 24 to 36 months.
And now talking about market reforms as well, now we also have the T+1 settlement. This also clearly aligns Nigeria global best practices as well, looking at the nuances we have there. But would you say our local investors and brokers are operationally ready for this?
I think whether we're ready or not, it's going to happen. It's going to happen. I think really the messaging really is to the market ecosystem. Everybody should get ready. And the truth is also, if you're looking at how technology has disrupted things, fintech apps are already doing close to T+0 settlements. So why shouldn't the market also push for it? But what it also means is that the banking sector as a whole needs to also ensure that it really automates as much as it can, digitizes processes instead of just manual processes that happens. Because what it means is that you have a shorter period of time to ensure that everything is done.
Speed, skill, impact is the name of the game.
Exactly.
Well, I will leave the conversation here for now. Thank you so much for your time. That is Folagbade Adeyemi, the acting managing director and chief executive of Anchoria Securities. You're still watching Closing by West Africa. When we come back, we'll be shifting our gears to the fixed income market for expectations from today's 600 billion naira bond auction. Don't go anywhere.